If we compare to our Canadian stock market to US market, the Canadian market considered to be much smaller size. We have a TX 60 index, which is basically the largest 60 uh, public company in the market. If you want to know the name of the 60 companies, you can search TSX 60 and you will get the list of all the company's name. If you look at it, we are the Canadian market is we are more focused on the financial services. For example, we have a big five, the five big banks, and plus the national bank, which is basically located in Quebec. And also we have a big three insurance companies: Sun Life, Manulife, and Power Corporation. And these are the companies, the symbol in the market. Also for the commercial staples, we have Canadian Tire, Dollarama, and Loblaw, and the Metro, and Samporo. And also for the energy companies, we have Suncor, Enbridge, and the CVE, CNQ is the Canadian Natural Resource. And the industry, we have the Canadian National Railway Company and the SNC, which is a construction company. And for the telecommunication services, we have a big three plus the short cable, which is a little bit smaller size. And the utilities, we have Fortis, EMA, and also personally, I also invested in REIT. I give a couple names here. So what I try to tell you is, even compared to the US market, we have a Canadian market, we have a much smaller size. But to an individual investor, this is more than enough. There are many times people always ask me, oh, I need opportunity, I need opportunities. But let me tell you this. In our Canadian market, it's already enough opportunities for you as the average individual investor to invest your money. I'm not saying you don't need to, you should not invest outside of Canada. What I try to tell you, if you even only look at the Canadian market, it is more than enough opportunities you need for your investment. Also, if you go to Susan's blog, I introduced this website before. You can get the name, all the company name here is a big list because she's also look at the companies in the U.S. market. So there are more company name here, and if you click on any company, you can get a very good basic information about this company. For example, I would like to get let me select one company. Okay, so this is one of the rate in Canadian market. So if you want to know the company, all the basic information, you can just click on that. You can get all the information you need. And also, if you click on here, Susan talk about how she thinks about this company and how from the investor perspective. So I always try to tell my friend again and again, if you want to be an investor, you want to need some information, you go to online, you can get the information in less than 1 minute. You don't even need to do your homework. You already get all the information you need for your investment. Unfortunately, 99% of people, they don't want to use it. Of course, it's not my problem, but I just want to say information is there. If you need it, you can get it right away in one click, just one click. And it is absolutely free. There's no cost. One click, you can get all the information you need, and it is free. So we have all these companies. So what should we do? I mean, if you just look at the companies, it may be not easy to understand how to invest. Okay, I want to give some suggestion. In 2011, Warren Buffett, he visited India and he made a speech there during an interview. And during the interview, he said, if you look at the typical stock on New York Stock Exchange, its high will be perhaps for the last 12 months will be 150% of its low. So they are pumping all over the place. All you have to do is sit there, wait until something is really attractive that you understand. There is almost nothing where the game is stacked more in your favor, like the stock market. What happens is people start listening to everybody talk on television or whatever it may be, or read the paper. And they take what is a fundamental advantage and turn it into a disadvantage. There's no easier game than stocks. You have to be sure you don't play it too often. So basically, Warren Buffett tells everybody, this is investing is the easiest game, and it is in your favor if you know how to play it. For example, I want to get a summary. For example, I put a TD, for example, okay. So this is from 2016 to 2018. It's up more than 60%. Let's say you purchased the stocks about 2 years ago and hold it today. If you sell 50% of the holdings, you keep the other half. So your original cash investment will be around, the cost will be around between $20 to $25. And today the stock price is $77. So even tomorrow, the price drop 50%, you still have profit. How's that? How do you feel if your cost is only between 20 to 30% of the market price? And how about we look back, say this is 2 years, right? How about from 2014 to 2016? They up almost 30%. Then how about 2012 to 2014? They up 60% again. Then how about from 2010 to 2012? They up more than 30%. So this strategy works every time in the last 10 years. That's a way you can invest TD and make your investment cost at the 30% of the current price. You can repeat this strategy again. And I want to tell you, this has been working for more than 100 years. Now, I try to explain to you. If you want, you can try it. But why I want to talk about this? I always try to tell my friends, investing is all about common sense. I'm talking about investing, not trading. Investing is all about common sense. If you have common sense, you can do it. That's it. If you don't have common sense, forget. This just is one typical example in our Canadian market. Okay, so let's say this. If in my time, I can make one successful investment in TD stocks, just one, and it can resolve my financial, the basic financial needs for the rest of my life. Why this happened, and why this happened again, and again. And another why is why I didn't do it. Because I didn't know, I didn't study, right? That's another reason why we should study the common sense about investing, why we should study what is the basic investing principles, and we should apply these basic principles into our investment process. One of my friends in office, she and her husband, they always maximize their ISP contribution. So basically every year they put in like $35,000 for almost 15, 20 years. But what happened is their return is about 1 to 2% a year. If you put $35,000 every year into your ISP for 20 years, you should at least have $2 million. Even you only get a very average return. I'm talking about average. You should have more than $2 million. But what happened is they only get 1 to 2% annual return. It's your money. Nobody cares about your money than you should. My friend, if you want to be if you really love your own money, please study how to manage it. It's not difficult. It's just about common sense. If you look at the TD as an example, it's not difficult to understand. But I know from my experience, I know a lot of people, they cannot understand the market. But if you try to learn the basics and think about it, you may be able to understand. Maybe even after you study, not everyone can get it. But personally, I believe most people, they should be able to understand. They may not be able to become a very good investor, but at least you know what happened. You know what you need to do. Again, a lot of people actually, they know what they're supposed to do, but they just cannot do it. This is normal. Just like everyone knows, I should go to a gym, do regular exercise, but most people, they never go to the gym. But I don't know, just from my own experience, I think it's my body and I'm supposed to go to the gym and I will do it. It's my money, I'm supposed to take care of that. I should know how to manage my own money. And then I started to learn. Okay, so even only look at the Canadian market, we already have enough opportunities for us, a regular investor, to invest. We have enough opportunities to invest our money and become rich. I'm talking about the typical middle class. I'm talking about the person who always maximizes your ISP into your ISP account. You should pay attention to that. Because if you invest more than $10,000, contribute into your IC account, and after 20 years, you should have at least more than $500,000, close to $1 million assets. If you don't have it, you need to look into the details. Try to understand what happened.